Good morning, everyone. Can you hear me okay? Great. Just to let you know, I'm on to sort of show the state of the market, but I also wanted to go over just some support resistance and bear flags and how I do it. So I thought you'd like that. I'm looking at a million things if my head keeps going like that. So what am I watching in here? Number one, definitely watching the downtrend. So, how do I identify a downtrend? I wanted to show you. I want to be sure I have you up. Great. So, this is how I identify a downtrend. A lot of people are using like a daily chart. I use this. I'm going to clear this. And I use a 50 SMA. That's not a 50. That's a 200. I like taking that out. I don't usually use that much. There. I take the 50 and I take the ATR trailing stop, which I've worked with for years, just to let you know that I've modified and made it sometimes 2.9 and 9, sometimes 3 and 11, but I just do this. So I just do this. I do the ATR trailing stop 9 and 2.9. That's all I do. So let me share that with you. It's on another screen, so sorry if I'm leaning. And let me see if I could do it. Now, just to let you know, if I can't copy and paste this, I have to reload for some odd reason. Sometimes I have to reload Google Chrome. So let me put this in here. There, and let me try to share that for you. There. So there's my setup. That's pretty simple. Now, I can use a lot of different moving averages, but right here, I'm just trying to identify the longer term trend. That's all I'm doing here. No more, no less. So that's that. Now, why am I showing that? Because shorter term bear flags are more likely to work. So a lot of people ask, why are you looking for bear flags? Because we're in a downtrend. So just keep that in mind. The thing you're looking at is the MACD, not the ATR trailing stop. So you go back to it. ATR trailing stop is up here. MACD is down here. So just keep that in mind. That's on the lower one. So you can use whatever kind of oscillator you want, but that one's worked really well for me. So you're in a downtrend. So then you look for bear flags. It means to me short on rallies till proven otherwise. So just short on rallies till proven otherwise. And the other trend lines, MACD. So the first thing I do is identify the trend, and the trend's been down. So I know you could say, oh, obviously it's down. A lot of people think it's just a little bump and you got to buy every dip. I'm the opposite. As long as the 4-hour is in a downtrend, I'm looking for bear flags. I'm looking for that kind of thing. I'm looking for a rally, an oversold rally to get overbought at resistance. That's all I'm doing in here. So that's what I'm watching when it comes to that. So I thought you'd like seeing that. So in there. And Kevin on the YouTube, good morning. Yeah, I went to University of Florida. I hope that doesn't get any UGA fans mad. I live in Atlanta now, so I'm sort of covering my bets. So good morning. So the way I'm looking at it in here is this. I'm looking at where this could go. So you see that when this is in a downtrend, you're going to find that bull flag short term are less likely to work. And if they do work, they don't make the whole objective. Like usually a bull flag, if it breaks up, it goes up by the amount of the previous move. But as you see, they're truncated because you're in an overall NASDAQ downtrend. So then you take something like this And I'm telling you, the rest of the group was getting pounded right there. That's what you're looking for right there. That little top, and then you get a bear flag at the top. I mean, bear flag in process of the top. So that's pretty wild. I just thought I'd show you that. Give me 1 second. There. So I had to do something in the chart patterns mastery, post one of my trades. Now, one of the things is definitely I look for those kind of bear flags. I'll look for them everywhere. You'll see that the bull flag, like here, didn't go to its full objective. And the bull flag here on the upper right, I'm trying to draw it live, failed. So you're seeing that the bearish patterns are working a lot better than the bullish, but a lot of people have a tough time looking at this because they're so used to buying dips. But it's all about identifying the index's downtrend. So that's the way I'm doing it right here. So identifying the index's downtrend, and that's all I'm doing. So I'm seeing this, and then I'm trying to identify bear flags. Now, what made the markets go down? To me, what's making the markets go down is one, you're getting the AI craze start to go away. And the other thing you're seeing is definitely the bond market and interest rates. So the higher interest rates go, the less PE should be on NASDAQ stocks. They're the high PE, high price to sales stocks. So just keep that in the back of your mind. And that's why the NASDAQ's getting hit percentage wise more than the ES, or let's put it this way, it was. So that's one thing I'm watching. The other thing I'm watching is going to a longer term, and I'll go to a daily and I'll use the 50 because so many people use the 50. Now, I know there are a lot that use all shapes and sizes. Most hedge funds use 9 EMA, 20 SMA, 50 SMA, and 200 SMA. But for simplicity's sake, I'm just showing this one, the 50 SMA. A lot of times when I've seen this go here, which this should go lower than the YM because it's more interest rate sensitive. And like I put on for the chart patterns mastery, every other day I show them charts at the end of at night. The bond market in a downtrend and then overbought, got back to the zero line at the bottom on a real weak bounce right to resistance. That's why we're bearish on the bonds. So that doesn't mean you have to short the bonds, but it means to me that then you're looking for bearish patterns in the NASDAQ. So when you look at this on a longer term chart, there you go. It's gotten destroyed. So in fact, there's a bear flag right here in the bonds. So right here. So a bear flag within a topping pattern. That's always a beautiful thing. So now I'm doing this. No matter what anybody says, usually these things follow each other. But it's not perfect. But if this goes down enough under that 50, that probably makes this at the minimum go to the 50, which is where it is right now. So just, keep that in mind. So definitely that. Now, here's the big kahuna. Does the YM go to the 50? So that's what we're going to be watching next. Does the YM go to the 50? So does it follow the rest? This is definitely going to act better because it's not as interest rate sensitive. But if this goes down enough on that, what I'm showing over here, usually this goes down at least to middle of this, at least to that ATR trailing stop. So that's what we're watching. That's what we're banking on right now, is looking at something in the Dow. Today, it's acting great. Don't get me wrong. You have a lot of Dow related stocks actually having earnings in the next 2 weeks. So you got, and what I say related, you might have lows in the Dow Jones, and I like doing companion stocks. So let's get it up here. I'm taking the public Dow Jones. There, and you're going to see that I'll do it by alphabetical order. And you'll see Home Depot's in there. That has earnings coming out, so that's going to influence Lowe's. So you have a number of these Dow stocks have like just like a Cisco and a Home Depot having earnings, and these have to start getting pounded if you want the YM to go down. So just keep that in mind. So like I just showed you in here, number one, Workday doesn't have an inverse head and shoulders. It doesn't have anything. If the NASDAQ's getting destroyed, it's going to get pulled down with it. It acted great earlier, and now it isn't. So it'll probably, a NASDAQ stock will probably get pulled down. So here's some bear flags for you. Bear flag is after a consolidation pattern after a move down. So that's what I was showing earlier. There's your bear flag. You had a move down and then a tight consolidation. So there's one bear flag. Let's find some more. There are a lot of them. Like I said, you might find bull flags, but the bear flags are more likely to work in a downtrend. There you go. Here's another one. Oh, let's take some pre-market. And you see the bull flags are just sort of flimsy. And see this? I don't call that a real bear flag. It's just too sloppy. I want a real tight bear flag. Now, they can be an index, it can be a stock, it can be anything that's that might have a discernible pattern. It can be a future, it can be a commodity. There's a beautiful bear flag. There's one. And that one was better than that. I don't like those kind of candles. Now, this is a kind of thing that a lot of people miss. Let's say you're a futures trader and you don't short that bear flag. So you see a bear flag here, and everybody says, oh, it's a bear flag. Yeah, you would have made a fortune. Well, the problem is you might have shorted it on the break. I can't tell you how many times I short on the break. You get stopped back out, then it undercuts it, and I'll reshort it. So it's really hard not to have an ego, and it stopped out here, gets back in it. That's all of a point. So you get stopped out, you lose a point, and once it starts breaking under it again, you just short it again. So you lost about a point at most, and then you made at least 15 points. Then I get out near the close. But that's some of them. So, and just to let you know, getting back to it about Workday, I don't see anything that resembles an inverse head and shoulders. In fact, I see a trend line break, and the rest of the group is getting pounded, and now you got to look at the moving average. That's what I think. So that's where I am with Workday. In the chart patterns mastery and the options room, we have a small put fly that looked like it was worthless, and now it's only 95 cents out of the money. So, yeah, it was worthless not long ago. So what I'm doing is I'm trying to buy the middle strike back for like 5 cents. I'm not going to get it. So getting back to it, Netflix, good eyes on your part. It is so hard to short it when it's already sold off. But go and look at that bear flag you're talking about, and then go look at a 15-minute that also had a bear flag. So you had sort of a bear flag within a bear flag. So just keep that in mind. So just to let you know, we try to do 1 minute. Then you have NVIDIA. That was a daily bear flag. There you go. So you put that on let's put it on an hourly. This was posted in my charts that I post for people on our site. So there's a 1 hour bear flag. That was a good one. So those are ones that are longer term. If the longer term trend is down and the bonds are on their low for the day, you can find 15-minute bear flags, but just keep in mind that I was showing you 1 minute, But heck, we have 15-minute all the time. So AM, I'll show you another one. Here's NVIDIA today. So there's NVIDIA, and now put it on a 5-minute chart. There you go. There's a bear flag for you. Plus, when the NASDAQ rallied, that wouldn't bounce. That was posted on the site too. So just keep that in mind. That's what a flag looks like. A prior move. So a prior move down. A wedge is different. This is a bear flag. That's what a bear flag looks like. A wedge is like that after a move up or a move down. So that's different. This is a tight consolidation. That's what a bear flag is. So just to let you know. So, and that's what we've been playing, and they've been working. So this is a wedge. You go down and you do that nice and gradual, and it's that way. It's not that. You need a consolidation after a down move, or like a Brecher ledge, which is a sell-off and then a horizontal move that forms that. So it forms a horizontal trend line at the bottom. So I'll show you one. Meta. Yeah, this was on our charts too. Look at those bear flags right here. Now that one wasn't a perfect bear flag. That was more a wedge. But this is what we were doing. This was on our charts too, about respect the break in either direction. So what do? Yeah, we shorted there. We shorted again here. Then, not being disciplined, I shorted here because I'm not perfect. I shorted here and got stopped. 309.5, 310.5. Why? It's nothing. Then it formed a bear flag, and that's where I posted I shorted again. Then when it got back under that, then that play was still there for that 1 hour ledge. A lot of times they do that to you. You just got to suck it up, take your pull loss, and then make your next 5 points. So that's in there. And like I said, I don't know. These are what I've been doing for 40 years. And like I said, if it's a tight bear flag, you play it. So, and if it's not tight and not identifiable, you don't play it. And that's what I do in here. So let me show you some more. Well, this is a Brecher ledge, which is a bear flag after a sell-off that's horizontal. That is a perfect ledge. What's the first thing to identify? The prior move. The second thing to identify is, can you connect a lot of dots or a lot of charts places for that? The more times you can connect to the line, the more important. And as you see, it fell apart today. Fell apart on a beautiful prior move and then a lack of rally. Keep in mind, the NASDAQ was only down 50, and this refused to rally. So that's how it works there. PLTR, no, that's nothing. So as you see, it's not any kind of tight pattern, and the prior move is a little bull flag, but I don't trust a bull flag when the overall trend is down. Now, if I go to a 15-minute, there's nothing in there either. You know, maybe here, but I never play a $15 stock on the downside much, because there's so many other ones that present themselves faster. So I'd rather play the other ones. I'd much rather play the higher priced ones, even a $30 stock. I'd rather play. So Boeing. What are you doing at Boeing? Well, the first thing is I'm not going near Boeing because it's in an uptrend. I just want to play the stocks in a downtrend. I'm trying to do the easy trade. So you take the stocks that have bear flags and are in downtrends. So there's a bear flag. All you're doing in here is you're taking a prior move and then forming that. So this is all a bear flag is. That, as it works off the oversold MACD, it doesn't go to a new high, it forms that. That's a bear flag. A wedge would have been down from there slowly. So that's a bear flag. And that's what we've been trying to play. Well, we played it last year probably about 100 times. So you identify the trend. That's the biggest thing. You identify the trend. So Disney, no. I want to take a stock in a downtrend, not a stock in an uptrend. So just keep that in mind. I want to find stocks in downtrends. And one way to do it is just scan. This isn't proprietary. It's go in and take stocks under their 50 SMA on a 4-hour. So all you're doing in there is you're doing a real simple list. So you can take my main list, and all you're doing in here is you're just going in my main list and you're adding a filter and you're taking a study and you're taking popular studies, moving average, the close at least 1%, let's say 0.01 below the 50, but not on a daily. This is on a 4-hour. I've been using the 4-hour for indexes, longer term, like an index, because everybody's watching the 50 that way, fine. But I'm identifying bearish on a 4-hour. As you see, there are 81 of my stocks that are under their 50. What's that mean to me? You're going to find a ton of bear flags. Ton of bear flags. Very exciting. So that's what we try to do in there. So all you do in here is you identify that. You identify what is under the 50, and those are the ones. It doesn't mean they have to go down, but it means the bear flags are more likely to work. So let's look at KLAC. Give you a for instance in here. All right, KLAC. That's a tough call because that's a daily that's in a big old uptrend. A 4-hour just started to get under. That one, yeah, in hindsight, it worked. But I just think there are better ones that are already in a downtrend. So that's why we played Netflix, Nvidia, Meta, Tesla. And the other thing is combining relative weakness or strength. So that's a big deal when it comes to these if you're going to trade short term. So what am I talking about? I'm talking about this, that the NASDAQ on a 1-minute chart had this massive rally right here. Massive rally. About 100 points from the low. So you combine chart patterns with relative weakness. This is pointed out on the Chart Patterns Mastery. What are you noticing in here? That when the markets rallied, this stayed like a wet blanket. So the whole point is if this stops going up, the ones with that kind of pattern are going to be more likely to go down. Plus the beauty is if this goes up more, these already are showing weakness. They might still go down. By the way, there's a bear flag. That was also pointed out in the room. But all you're doing in here is you're trying to find groups. You're trying to find the patterns. You're trying to identify the trend. And then I really go on support, on relative strength. So let me show you. So just Chart Patterns Mastery, you saw me post this about when the NASDAQ rallied. All of these look like dirt. All of these had bear flags. Every one of these chips. So that's when the NASDAQ was rallying. Just keep that in mind. There you go. Look at all those. Every one of those and all of those were drawn before they broke. So all of these showed weak relative strength in before the NASDAQ went down. So that's how we try to do it in there. And we're doing those all the time. So, in there. Support on the NASDAQ, just try to find multiple layers of, let's say, old highs or old lows. So one thing is to take the NASDAQ. The other is to take the non-24-hour NDX, because they can show a different picture because they gap up or down. So there's your first support, right where it is. Then you have that prior top and that prior bottom. And that's why I don't look at support as being a number. I look at it as a zone. So there's your first on the actual cash. On the actual index, probably in there, which equates to that. So that's 70 points. But if it doesn't hold, then you have nothing till down here. So everybody on the chart patterns likes when I imitate Kramer. There's nothing. There's nothing. That's from 2008 when he said Bear Stearns shouldn't be down. It was 68. Next day it opened at $1. But overall, I like his overall market perspective. But I like to joke about that. So that's your gap. That's the gap on the futures. That's the gap on the cash, and all of those have been filled. That's the big one. I don't know if it's going to get that low, but with the bonds on their low, sure, that could go down like that. And by the way, chart patterns mastery. It didn't look possible, but you better watch that butterfly we're in. So I tried to buy these for 5 cents, buy the middle strike back. This was 3 cents, the butterfly. So just keep that in the back of your mind. If this gets under 225, this could go to like a buck. I didn't think we had a chance. So talking about buck, let's show you deer. So there's the support. When you want to know about support, there. So you see the support back here, it broke. So then if it reclaims it, sure, that would be fine. But you got to look for the identifiable trends. So this one's look great. I didn't go near it. So just keep that in mind. It was in an uptrend, so I didn't go near it. Just keep that in mind. Didn't go near it. So I want ones that are in a downtrend. So let's just do this. I'm going to save all the ones under the 50. Now, don't get me wrong. I'll look for rallies too. But when everything's in a downtrend, I'm going to look for bearish patterns till proven otherwise. That's all I'm going to do. Now, there are a couple that are exceptions, and I'll show you those. So, and by the way, when I mentioned Bear Stearns, I cleared Bear Stearns until I left the floor in 1993. First, I was with First Options, where I don't know if you listened to the disaster story about the person that sat next to me on Monday of the crash in 87 that lost $54 million. But that was my clearing firm. Then I went to Bear Stearns, and I still had the trading jacket from back then. So actually now it fits. It didn't before. So all I'm doing is taking 111. That's all I'm doing. So I'm taking 111, and I'll show you. We just talked about relative weakness when the NASDAQ rallied. Well, guess what? When it's selling off, you can look for relative strength too. And I'll show you some of those examples too. But first, all of these are under their 50. There. So every bearish pattern is more likely to work. So, Interpol tried to look for that person for like 5 years. So in just, if you want to know, I collect a lot of books on the stock market, and I have probably 60 around 1929 or earlier. So, I mean, books. So I'm fascinated with crashes. So they had FBI tape on his office, in all this as they were investigating it. And I told my clearing firm, that was first up, by the way, back then, that when they took off the police tape, I wanted his office. So from 1987 and 1993, I had his office. So 1992, I then went to Bear Stearns. So I had his office. So just sort of sick sense of humor, but that's just the way I'm fascinated with crashes. So thank goodness I was short in that crash. So now what do we do? Getting back to it. Well, you see, the market refuses to go lower now. So I promised I'd do the other thing. I'd show you stocks that are withstanding the carnage. So which ones are they? Well, this one. This one. I have no idea why that rallied, but I want to show you something sort of interesting. It's sort of going against the trend, but it's already gotten punished almost to support. And that's a bull flag. And keep in mind that while the NASDAQ was getting annihilated, this refused to go lower. How do I know? Because I wanted to buy it and I never got a chance to buy it. So that's one thing. The other thing, and I think I'm going to be talking about this in the money show in October, is about option volume. I'm not sure which one I'm going to talk about. There's rare times now where options do matter. Usually with the algorithms, it's futures pull stocks. It used to be option precede price. But when I see a bull flag like this on a Friday, because most takeovers are over the weekend, that's a lot of volume. That's for today. That's sort of stupid because if something happens, it'll be over the weekend and these will expire worthless. But this went from 212 to 220 and they just piled into these calls. Now, if I'd see this and I'd see like the out of the money for next week have that kind of volume, yeah, I'd be buying PANW or a spread over the weekend. But it seems like this is just day traders playing it. If I saw unusual for next week, I'd probably do some spread over the market. So just want to make that clear, which means I haven't done anything in there yet. So unfortunately, now you might say, why don't you just buy the stock here and just put a stop under here? Well, the problem with that is I don't want to risk $1. So was that a bear flag? Well, the stock's been acting great, so I wouldn't trust that that's a bear flag. I want a backstop. So I'd rather have the stock like right here, like 218, so I can stop myself here and only risk 50 cents. Or like the Chart Patterns Mastery likes 50 cents. So one of our loyal clients likes me to do that. But getting back to it, all I'm showing you is overall what I think. Now, because the NASDAQ on a daily is right at support, because you were asking about the support, and then when you look at it on the cash, it is at support. Now, do I think this is going to hold later? No. I think it's going to go a lot lower unless the bond market really rallies. But for now, it's holding that support. And on the left, it's holding that support zone. For now, that's what it's holding, right in that support. That's why when it gets to that zone, that's usually where I don't mess around on the downside. So just keep that in mind. I don't like shorting at support zones. I like shorting when there's an air hole underneath or lack of support. So that's what I try to do. So long term, because I'm supposed to do market outlook, long term, weekly chart. This is the first time we've had that kind of reversal since here. That was last year. We get a nice reversal candle. But you'll see every time you got a red candle to take back like a lot of a green, you had a follow through every single time. Every time. Look at this. That one, that one, that one, that one, that one, and so on. But what happens? Everybody up here wants to short on the way up. And keep in mind, this red candle didn't take back all of it. So just keep that in mind. So this time it took it all back. You see, I think a mile away, the support. But eventually, I think it's going here to the big support. So NASDAQ, this is a weekly. That looks a little scary. So you see what happens if this doesn't hold. Yeah, 14.5. For now, it's in this zone right here. So right now, you're sort of in purgatory. So I'm not going to touch it in here yet. We've already made money on our bear flags. So I'm going to continue trying to make money on the bear flags. But when you're at support, it gets a little dicey, as you see on the upper left. So you see the Russell rallying, you see the Dow rallying. It's not the time to mess around on the short side. In fact, where's PANW? I hate to ask. Nah. Yeah, there it goes. So if this holds, well, you see it. So if this gets over 220, all heck's going to break loose. But you see that vertical move followed by a consolidation. And that vertical move resulted in an overbought MACD. And then, and I know a lot of you go ask about this. What's it mean when an overbought is worked off well? It means when it's overbought, it works it off well by retaining its bullish structure. Like here, it was overbought. It didn't retain it. It was sloppy. So I didn't go near it. So now it's retaining it. So this could get real interesting at the close if people start thinking there's going to be a takeover. 220s could be real interesting. I'm not touching them yet, just so you know. So none of these am I touching other than this. Now, keep in mind, I want the NASDAQ to go down. I'm in something that expires today. We did originally an incredibly tight butterfly. Now, keep in mind, I hardly ever do a spread 2.5 point wide. But this stock, as you see, is still at support. So on the one hand, yeah, the markets look like dirt. On the other, this was at support, but the rest of the group was getting nailed. So we just did a tight one for like 33 cents. So if it went up 10 points, I lose $33. Right now, all I'm doing is trying to do this. I'm trying to buy the middle strike for 5 cents. And then if all hell breaks loose, then I have these. So, I mean, that's what I'm trying to do. And let me just tell you, when I talk about options of unusual, like PANW, I mean, that's a heck of a move. I mean, it was 213. This was on our charts last night, unfortunately, to buy it at support. Let me show you. I think it's still in here. There. That's from yesterday. From yesterday. I didn't buy it this morning. So there you go. Also trying to form a bull flag and I missed it. So that was actually on the charts. You had a chance this morning. Now, what I'm watching now is that if this stays in this zone, I have to see if next week's start to kick in gear. That's not kicking in gear. That's not doing anything. You want to see like 5,000 or something like that. The following week, nothing. So let's just say in the next 2 hours, I see this have like 3,000 before it goes up. You just see like, not that one. Let's say the 235s. If I see like 3,000, yeah, I'll do a spread over the market. The best ones are when the option volatility goes up because of demand and the stock stays the same. You don't see it very often right now. You used to see it all the time. That was a bread and butter when I was on the floor. You'd see a broker was just buying calls and the stock would go down. So you tried to like sell them to him and he or she would be like, I'm still bid there. And I'm like, sell 200. He's like, buy them. I'm like, oh no. So then you knew something was going on. So then you have to buy stock or you buy it deeper in the money or something. But that was in the old days when it wasn't as ruled by algorithms. But if I see these start to really kick in, let me put the way out of the money. Yeah, there's nothing. If I start seeing like the 260s trade like 1,000, yeah, I'm going to do a spread. But I don't see that right now. I still don't know why it went up that much. It might have been because somebody leaked this to Twitter, on our site. And, I'm kidding, by the way. But there was your bull flag. And this is where it's going to get real interesting. If the NASDAQ's up for the day, do you risk doing this? Shorting these at resistance? I wouldn't do it. What you do is you wait for a reversal candle at that resistance. So if you see it go here, well, I'll show you a perfect example. Here's Meta a couple of days ago. I'm not talking about yesterday. Well, right here. Yeah, tried to get over resistance and then it formed that. And then it got nailed. That's a 1 minute chart. Then it rallied right back to it. You got a mulligan right in here. But I'm telling you, I wouldn't have shorted here. This is where we shorted when you got the bear flag. I'm not that good to exactly interpret the candle there. So we shorted a point lower. So it's all about direction, not price. At least that's how I do it. Other people have different ways to do it, but that's how I do it. And I've been doing it that way and it works. So that's how I do it. Now, I'll tell you right now, though, let's just for laughs say that PANW forms a bear flag in some way. When I see that option volume, I'm not taking that trade. This stock looks too good. So just, that's what I'm looking at, just to let you know, it looks too good. So a stock that, let's say a 15-minute. Do you really want to play any bear flag when you see that? I don't. So just to let you know, there's that bull flag from yesterday. There. Did I do it? No, because I was bearish on the markets. That was one reason I didn't do it. Well, I don't really use Fibonacci extensions. I use support and resistance using price. Other people get that, but it's all about, to me, support and resistance. And overbought, oversold. But, to me, there's your support. There's your next support. So, I do it by price support and resistance. So just keep in mind that something might project to something, but if everything is oversold, or like today where it refuses to go lower, then you don't screw around on the short side. But yeah, I mean, if that works for you, great. I don't use that, but if it works, great. Now, just to let you know, it's hard for me to even look at that stock, but I do. And the other thing, like I said, most hedge funds use the 9 EMA, the 20 SMA, the 50 SMA, the 200 SMA. If other ones work for you, great. But those are the ones that most hedge funds use, just to let you know. But if the other ones work for you, great. So the other thing, definitely, I'll show you. Like I said, I'm not even looking at moving average crosses of 2 moving averages. I'll look at the MACD crosses on the bottom, but I'm looking at overbought at resistance. That's all I'm doing. I'm trying to make it as easy as possible for me and my subscribers. And I don't know if it's my subscribers and I. So sorry about that. But overbought in a downtrend, then you look for the reversal candle. So a lot ask, how do you know it's overbought? You don't. It's hindsight, but it's overbought. You just don't know if it's going to stay overbought. And that's why when it's overbought under resistance, you look for the reversal candle so you don't get hooked. I mean, that's the way I do it, is you look for the reversal candle. So like here, it looks great that, oh yeah, I shorted up here. Heck no, I wouldn't have shorted up here. Well, we did, but that's another story. We shorted also when it broke that, when it created the reversal candle and was overbought. So do I miss maybe the first 20 points? Sure. But then we make the next 40. So it's just all about direction. And that's at least how I try to do it. Now, just to let you know, I don't want to see this. I don't want it to rally because I want this to get under 225. It's not going to get under 225 if the NASDAQ is up. So it's really funny because on the one hand, there are a lot of things looking a lot better. On the other hand, there's the emotion part, which I'm in right now, or just detaching yourself and saying, we're not going down anymore. So it's just interesting how that works. And like I said, if you use different moving averages, if you use Fibonacci extensions, if it works for you, great. I mean, I just don't. So everybody has a different way to do it. It's sort of like if you have a different swing thought in golf. If it works for you, then you do it. The same with instructors. If a certain instructor, Butch Harmon, let's say, rings true for a pro, then you use Butch Harmon. But they all can be different techniques to get you to the end game of winning. So, I mean, that's what it's all about. So, if it works, that's what you stay with. So I don't know if you wanted an opinion on VC. I don't know what that means. But if you wanted an opinion, I can't tell you how many people I've known have lost their shirt by betting on buying a stock that has a big yield, because the higher the yields go on treasury bonds, why would you take the risk in a stock? As you see, that's worked. In fact, since the bonds started selling off in 2022, the stock's gone straight down. The other is, I've known more people that have also gotten destroyed because a stock, the yield goes higher and higher and higher, and it's because they're going to suspend the dividend. So I never buy a stock based on dividend. Maybe a utility or something, but if bonds are getting destroyed, why not just go and Treasury Direct and go buy a bond that yields 5% for a year? So that's how I try to do it. Somebody was asking on the YouTube channel, I think, about Verizon. I was just on the phone with them last night about my bill, so I'm a little partial about wanting to short it. So in there. Yeah, there's no way I can buy junk. Let me show you something of why I think stock markets have gone down. That's a little more graphic. Nothing bad that you have to hide your kids' eyes. So I want to show you something sort of interesting. Now, keep in mind, in the grand scheme of things, the ES is up here and way up here. So it sold off here, not because of COVID. COVID was down here. It sold off here because of bonds. But how is it up here? Because look at this. This is the Department of the Treasury interest rate. And here's the yield curve. Rates. It's just the rates. So you're going to see a 1 year's 5.38 on August 1st. Now go to the beginning of the year. Well, we could take it last year. 1 year, 0.4, 0.4. Then it went up last year and the market got killed. But guess what? There you go. It got to 4 and the markets got killed. Then it started going down a little and now it's 5.3 and the markets are near a high. There's something not right. And keep that in mind, where it was and where it is. Because right now you can go and get 5.3 for a 1 year. So I think that's real dangerous. I just don't know when. Sort of like a horror slasher movies. You don't know when the bad person's coming out, but you know they're coming out. You just don't know when. And that's how I feel about the markets. But I got to see those reversal candles at least on a weekly chart, which you're starting to see. It's just really, really hard to short at 44.80 when it was just 4,600. But in the grand scheme of things, that's nothing. That's what? 2% at most. So, I mean, last year it went down 1,200 points. So, what is that? 25%. And I'm probably adding wrong. So, I'm a trader, not a mathematician. So, just keep that in mind. That's my Dr. McCoy invitation. Yeah, the chart patterns mastery has to put up with this every day. So it's rough, but at least I've showed him good trades to make up for it, because we found the more money that I make them, the funnier I am. So that's so I'm trying to stick true to that. I'm just scanning right now, deciding what I'm going to trade. So like I said, downtrend. I'm not buying strength. So PANW, right at resistance. Like I said, I'm not going near this until I see another flurry of call activity. And that's where I am at the moment. So I just can't do it. I'm not shorting it, but I sure as heck have a tough time buying it when it's at resistance and the flurry of options is gone. So ultimately, I think the market goes a lot lower. So this is another reason that I think it's going lower. Not now, but later. Number one is the bonds. Number two is look at the monthly MACD. So just keep in mind that if you use the ATR trailing stop, not the 50, but the ATR trailing stop, but that's a point of contention. But it's under it, believe it or not. And this is extremely overbought. On the other hand, it was overbought here too and kept going. That's why those reversal candles are so important. Oh, how did I? That's a great question of how to keep track. Just because I'm a genius and can watch 100 stocks and their options all day. No, how I know is because I was pissed off because I missed the bull flag, because I missed this one that I posted. So then I went to the option buy. I'm like, holy cow, did that trade a lot of options? So now what happens? As you see, you didn't see the flurry for next week. That was a big tell that there was no flurry. And that's why I didn't chase it. So, but the only reason is because I was mad I didn't get it. And I started watching the options. It was just trading a huge amount of options. But if I don't see him for next week, because most takeovers happen over a weekend, then I'm not going to stay in over the weekend. So that's how I saw it. Now you could do things like this and structure your market watch by going through every stock I have and do it by call sizzle, which is the how many calls in relation to normal. The call sizzle right here. So the problem is PANW has some 1.5, but it's just not that big. So I just had to go on. It just happened to be a stock I was looking at, if that helps. It's just a stock I was looking at. And Boeing, I have no idea in Boeing. That's what I was showing earlier, that in a bit, if the overall market's going to get trashed, even though this stock on a monthly chart looks great, it's just hard to chase it when everything else is starting to get to the 50. So I have a tough time playing Boeing in here because definitely it's acting better than anything else, but is it going to get pulled down like the rest of the markets? So it's sort of in a purgatory area. I will tell you, if bonds come back, that's a big if, but if bonds come back, then you got to look over that. It's a buy, and down here it's a sale or short. I'm looking at a long-term resistance. There's your big problem, is that resistance. That's where everybody got hooked in 2021. So that becomes massive resistance. So it's really hard to buy up here when it has that much resistance and the overall market looks like dirt. So that's what I think in Boeing. So I hope that helps. So let me get going. I hope you enjoyed that. Like I said, as long as the bond market refuses to rally, I just think you have to short rallies. I can't buy dips until I see this up 23 and this down like this. So you get a positive divergence. Even though today the market's acting okay. Okay. But until I see these bonds on a continuous basis do this, and I see the overall markets do that, then I'll get more constructive about the markets. So I hope that helps. Thanks for being with me, and I'll talk to you later.